Greetings from the Charter School Office. I'm Albert Bertram, the Finance Specialist for the office. This sheet is a review of the audited financial statements, so it essentially takes the audit and summarizes it in 4 pages. We use this in our office for me to communicate the audit to others without having to have them read the whole audit. So we're bringing this to you to communicate with you. We brought it to you in the past in the form of those regional meetings, but instead we're going to try these videos and see how you guys like these videos. So this is important because even with the PrepNet agreement, because this is what's available to the public, so hopefully we can all be on the same page with this, and we'll get into the sheet now. So starting with the statement of net position, this is directly derived. All this is directly derived from the audit, so I'll show you that. So here's the title, statement of net position. As an example, we'll look at total assets, which is listed at $467,838. So we'll then go to the audit. Here, statement of net position for Wellspring, and we have our current assets, our capital assets, and then our total assets of $467,838. So you can scroll down to see the other ones if you were looking at the audit. Going back to our sheet, we'll move down to our ending net position, which this is the ending net position for June 30th, 2014, and this was the net position for June 30th, 2013. So this is the previous net position, this is the current, just for comparisons. As we move down, you'll see the balance sheet, which is these are current assets in the general fund, so that's important to distinguish that. As we move over here, these are the fund classifications, which I'm going to show you these on the audit in a moment. So here's the committed amount of $348. So if we go to the audit again, the balance sheet is 2 pages after the statement of net position, so we'll go 1, 2, here's the balance sheet, and then we're going to be looking in the general fund column. Now in our office we still look at these the school service fund, but for this sheet we're going to just look in the general fund. So here's the cash and due from governmental revenue sources right here. As we scroll down, we'll see our committed amount of $348 right there. So going back to our sheet, these amounts match up. So you'll see our cash and our due from governmental units over here, and then back over here we have our $348 of committed, which committed is amounts constrained to specific purposes by the board. To be reported as committed, amounts cannot be used for any other purpose unless the board takes action to remove or change the constraint. So there aren't any of these other fund classifications for Wellspring Academy this year, but these are all listed in the audit if you're interested in knowing what they are. So moving up, this gives a breakdown of the current year's activities in a quick snapshot. So here's the beginning fund balance, revenues, expenditures, other financing sources, and then net change, and then the ending fund balance. So that just is pretty much is a quick snapshot of what happened during the year. Down here we have some calculations. General fund divided by revenues, which takes the ending general fund, divides it by the total revenues. General fund minus restricted, same thing, except if there was a restricted amount down here, it would subtract that first. General fund divided by expenditures takes the ending general fund, divides it by the total expenditures. Then ending general fund divided by beginning general fund, it takes this divided by the beginning general fund. If it's below 100, there was a decrease. If it is above 100, there was an increase. So seeing as it is well below 100, there was a decrease to the 348 from the 9,280. So as we move down, notes payable, this is usually associated with state aid notes. Long-term debt would be associated with a bond of some sort. Wellspring Academy utilizes lease, so here's the lease information. These 4 items are referenced in the note section of the audit, so these boxes are essentially what would come from them. Now there's nothing for notes payable or long-term debt for Wellspring Academy, obviously, but there is stuff relating to lease, and then this is going to be provided in page 4 of this sheet as well. So I'll show you that when I get there. Management fees, I didn't calculate it due to the sweep agreement, but it's just NA, so that's why it's just NA, excuse me. And then this shows up like this because the NA doesn't work with the formula, so that's why it just shows up like that. So as we move down, here's our square footage. If this is incorrect, please let us know. We like to have all of our information accurate and in all of our documents and stuff, so it's important that we have that. from that, utilizing that square footage, we take our total revenues divided by that square footage. That's where we get this number. Expenditures divided by square foot comes to this. And then difference. This is a rounding error. That's why it's 0, just so you know. And then payment per square foot takes the lease amount and then divides it by the square footage. And then that's where that's derived from. Again, it's rounded to the nearest dollar, so just so you know. Operations and maintenance per square foot takes the line item of operations and maintenance on the third page, or excuse me, the second page, which I'll go down to. Right here, operations and maintenance, and then divides that by the total square footage. That's where that number is derived from. And then square footage divided by fall 2013 count takes the square footage and divides it by the fall 2013 count on page 3, which is the corresponding fall count for this fiscal year. So that's what all that is. Again, we do this for all of our schools, so I'm just doing it, even though I'm just doing it for everyone. So as we move down to the page 2, this shows a breakdown of the detailed expenditures and revenues for the year. So that box up in the upper right hand corner of page 1, this is like an expanded view of that. And then this compares June 30th, 2014 to June 30th, 2013, then the difference. So, and then you can see all the breakdown of everything. Now these are accounting code numbers, and then these are the individual line items. If you're ever curious about those, I took the accounting manual and I put it into Word, and then if you come up here, you push find, then you come over here and you type in whatever you want. If you're looking for basic programs, for example, you type that in, you push enter, and then you can move throughout this document wherever that is. Now if you put something too broad, like the word "the," it's not going to be able to search it. But if you make a pretty specific search, you can find stuff pretty easy. And then you could just find out that basic programs are instructional activities, including enrichment, designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, and social and emotional handicaps, including pre-kindergarten. And then here's the code number 110. So that's just a tool. I just thought I'd share that. So as we move down, we'll see our ending general fund balance. So this is again 2014, 2013. There's our 348. Now this is the budgetary comparison. I'll fix this a little bit. I don't think this comment shows up for you guys, but this comment essentially just lets us know that at July 1, the original budget's due, and that's well before the school year. So it's pretty important for us to remember that if there's a variance between these. Now there's not much variance here between the original and final budget, but with some of the other schools there is. So that's why that's there. So original, final, actual. This is the difference between the final budget and the actual, and then this is the percent change between the final and the actual. So that's what that is. As we move down, this takes the total instruction expenditures and divides it by the total revenue and puts it in a percentage. So up here and right here, this would take the total instruction divided by the total of revenues, and then that's turned into a percentage for 2012, 13, 14. You'll see that Wellspring's trended up to 43 and stayed around 43 from 2013 to 2014, which is good. Over here we have revenues divided by fall 2013, and then expenditures divided by fall 2013, and then the difference just takes the fall count and then does a quick calculation. So next page we have the enrollment numbers. These numbers are derived from CEPI. This last one is the number I received via Epicenter, the DS 4061 count number for the school year. That was unaudited, so if that's different, that's why. I'll update those as the numbers become available and I go to enter them. So next year that may change, so that's why that's important to mention. So percent change just shows the percent change from one fall count to the next. So yeah, that's good information there too. Now if you're interested in a visual display, here's a visual display of the count data, which many people are visual learners, so I thought it was good to incorporate that. Below we have our free and reduced lunch count. These are from CEPI as well, and then these are the percentages that correspond with that fall count, total fall count. So That's where those come from. And then again, we have our visual display for those who are visual people. Now down here, this is the information that I talked about on page 1 that I referenced down to page 4. This is page 4. So here's the lease information. This is directly from the audit, which this is the page number, page 18 from the audit. Down here is the management company information, and this is from page 15 in the audit. There's no findings, which was good. I put a note that the academy switched auditors this year, and then there's just a quick note about capital assets, and that would be it. So if you have any questions, feel free to ask. I hope you got some benefit out of this, and thanks for all you do for the kids of Michigan. Have a good one. Bye.